Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your Sunday night, October 27th market recap video. As you can see here, corn is down 3/4 cent to start the week at 3.86 even. November soybeans are up 3 3/4 cents at 9.24 even, and December Chicago wheat is down 2 3/4 cents at 5.15. Going to go ahead and get it started off with a disclaimer here. Just remember that everything I'm talking about is just my opinion, and that there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. All right, as you can see here, we're a little bit softer on corn, a little bit firmer on soybeans, which is nice to see, and wheat's a little bit softer here to start the week. Going to go ahead and get on into the charts and your technical look for the week. As you can see here, we had December corn making a nice push up to the $4 area, the 200 period moving average up there at 401, and obviously we found some pretty good sellers there, and we're just making basically a bear flag within this overarching bullish trend here. We're trying to find support at the 385 region, and if we break that down to like the 380 region as well, 380 to 381, that's kind of where we sold off down from after the WASD on October 10th there, and we found some buyers there. Traders use that dip there as a buying opportunity. So I'd look for some good support here to start the week at 385, and if that doesn't hold, then the 380 level. If that ends up breaking, I think the trend is definitely going to be in jeopardy, but we'll watch that pretty closely here. As far as like the upside, obviously the big target, well, the first resistance level, which is pretty minor, is 396, and then obviously the big one is the $4 level. That's a big psychological resistance as well. So going on into soybeans here, if I can find it, November soybeans, one word of note here, these are going to be coming off the board here relatively soon, so I'll be switching over to January, but yeah, November soybeans, obviously we've seen this nice push up on the expectation of better Chinese purchases. Over the weekend, they did meet, and the Chinese said that they would like to, or that they've made significant progress, and that they would like the U.S. to take the tariffs off that are coming in mid-December, and that they would follow suit with more ag purchases or more announcements of planned ag purchases. That did not happen. Basically, both sides said, what, these phase one talks are coming along and it's going great, and we're getting closer to drafting a deal to be signed in November, mid-November 15th and 16th at the APEC summit. But, there's no, even though both sides made progress, there's no mention of, further ag product purchases by the Chinese, and also, there's no mention of the tariffs coming off as well here for the near future. The October tariffs were off, but, the December tariffs are still planned. So, just with that announcement, traders were expecting some kind of an announcement as far as ag purchases go. And so they were obviously disappointed on the news on Friday, and we sold off pretty good. We were down 13 cents at the end of the day at 9.20 1/4. And obviously we're getting a little bit of that back here overnight. We're up about 3 3/4 cents. I think we're probably going to go up and challenge this 928 region. And that was an area where we supported on October 16th, 17th, and October 23rd as well. So I think, 928 on into 930 is probably going to be a decent resistance area for soybeans, and I think bears will probably latch onto that, and we'll see basically, are we going to pop back into this 930 to 940 channel for the week, or are we going to go up and test it and fall back and go down and test the 910 region. So support in here is a 920 to 923, and that's where we're seeing some buying come in, but it's kind of a wait and see at this point in the soybean market. Could definitely be a trend changer coming soon. And going on into the wheat market here, obviously we had this nice push up here just on the better export sales for the world market. Obviously, the U.S. futures have been a follower of the world futures of Paris, and so basically, we've been falling back here as the prices paid for the world exports, have not been dramatically higher, and for the last couple of tenders. Now, with that being said, Egypt has paid up here recently, but just the last couple of tenders really haven't been. I guess they haven't been as desperate. So the market's, kind of tailed off here. We're getting a little bit of a bear flag in this overall bullish trend. I'd look for this 515 level, which is a level I've talked about for a long time, to hold. If we don't, we're probably headed down to this 505 region. And that's kind of the area that we supported here on October 15th as well. And that's an area that we saw resistance on October 9th and October 10th there as well. So I think, if 515 breaks, be looking for that 505 region to be filled in pretty quickly. If we do continue the rally here, you're going to want to look at a rally above this 523 region, and then we'll go up and test these other highs at the high for the move as well at 535. So Going on into the cotton market. Last week we saw a pretty good, we saw some sideways consolidation, kind of like soybeans, and we tested that 65.55 level just a couple of different times there, and the market obviously found sellers there. I think if we break above there, we could go to 67.70, and that's also near the 200 period moving average, this blue line up here. And if we do fall back down here to start the week, I think we're going to find buyers in here at 64 like we did on the 22nd. And if that breaks, we're probably going to go down and test this resistance zone basically between 62.50 and 62.75, that old resistance zone. Should come in support. So number one, your first support would be 64, and your second support would be 62.50 to 62.75. You really don't want to see it close below that level as far as that goes. And getting on into the December live cattle market, really, really nice uptrend that we've seen here starting in early September. And basically, they think that there's going to be a shortage of beef in the fourth quarter of this year, and beef prices have continued to rise. And obviously, like the prices paid for the live cattle and the live cattle futures have consistently been higher here since September. It was nice to see us break out of this 114.50 region, and that was these highs made back in July 11th and July 25th here of this year. We broke out of that here last week, and it was like picture perfect. I mean, broke through it, went down the next day, profit taking, tested the 114.50 area, and then continued the rally there on Friday. And that being said too, on Friday, the cattle on feed report came out, and it was for cattle on feed, it was 99%. Was the actual number versus the average guess of 98.88, and placements was at 102% versus 101.63, and marketings came in at 101% versus 100.87 was the average estimate for marketing. So in my mind, kind of a non-event for the market, but we'll see how the market reaction is on Monday and how the market trades. In my opinion, the reaction is a lot more important than the report. So like I said, if they add on here, we'll probably see them test this 117.10 area to 118.20. That goes back to significant highs sort of towards the early life of the contract. And, if they do react bearishly, I think you would want to see this market hold the 113 level, as you can see here. We went down and tested that level 1, 2, 3, 4, 5 or so times. That 113 level is a pretty decent support level. If that breaks, we're probably headed down to this, 110.5. So those are my levels for December live cattle, and on into the hog market here. This has been a really, really tough market to trade here, as traders have been expecting a lot better exports from China, and we have seen better exports from both China and even Mexico. And so far, basically, those export sales have fallen on deaf ears. The deferred contracts out into 2020 have been a lot more bullish than the December contract here, and really we've just had a false breakout and we've tapered back from there. Basically, we've got sort of a mostly sideways trade, basically between 72 and 63 here in this range. I guess I've got support pegged at $63 and then up there at 64.30. That's kind of where this last little jaunt lower stopped. So 64.30 is your first area. Your second area is 63. And, we basically sold off. People are asking why, with these better exports, why we sold off. Well, the weights in the U.S. have been higher. They're, I believe, at 285 and change. And usually they're at 282 or so for the slaughter weights for hogs. And, basically the opposite of the cattle market is that traders are expecting way higher supplies for the fourth quarter. So hence the underperformance of the December contract and the better performance of the February and April 2020 contracts. So that's the markets the way I see it. Thanks for watching the video. If you guys have any questions, visit us at aa-commodities.com or give us a call at 712-262-7606. Appreciate it.